Well, thank you for joining me. I'm Tom Perrone, and you're joining the broadcast called All in the Numbers. And this is a broadcast which we take financial strategies and ideas, put them together, and share them with you. And today I'd like to talk about a couple of things that are very, very important. But before we get into the program, I'd like you to take a look at how you can contact me and how you can send me any email or question that you might have. You can send it to necgginc at icloud.com or call me at 203 530 6615. So, under case two, we're going to talk about using a defined benefit pension plan for a buyout and also a combination of executive benefit. Again, I'm Tom Perrone, New England Consulting Group. And this is a case I ran across and worked with for quite a while. And it turned out to be pretty unique. As you can see, we're going to be using some defined benefit programs for a particular reason. So let me give you the fact pattern. The situation was we had Andy Bag of Donuts and son Munchkin, and they built a great business, but Andy wants to give the business to Munchkin. He doesn't want to sell it. And Andy also wants to retire. However, most of the cash flow of the business went back into growing the business. And because of that, they've grown, they've been successful, had great cash flow. However, Andy, Bag of Donuts, never really saved enough for retirement. Now he's 65 and he wants to gift the business to Munchkin and not sell it to him. The problem? The income. So the key elements of this case were basically the business has been and looks like it's going to continue to be successful, has great cash flow, it has a very good business culture, so it's going to continue, and they're hiring good people and paying them good money. Munchkin knows the business well. His dad taught him well. He knows how to continue this business. So dad really isn't needed as far as the way he was needed prior. Now, Andy Bag of Donuts wants to retire at 70. He's made that the date he's going to stop being obligated and having a schedule. But he does want to give the business to Munchkin. And at this point, Munchkin owns no stock. Andy owns all the stock. So, we came up with a solution. The first thing we did was we installed a defined benefit program because they have great cash flow. And we skewed that benefit towards the older and higher earnings, which was Andy. And that was really like an executive perk for him because about, 92% of the contributions, very large contributions made, went to his account. And you can see what we're doing. Those contributions were made from 65 to 70 to pack them into Andy's account. But the end of age 70, in 5 years, that plan will end as far as the company goes. Now, I don't know much about defined contributions or defined benefit programs. I need help in here, and of course I always go to the specialist in these areas that I'm aware of, but I don't work with every day. And there's some really good companies out there that do some really good work, and also individual pension people that know how to put these things together. But basically, under the current defined benefit program, you could put up to $225,000 away, or 100% of the average compensation. You can see over here on this report. Now, Andy Bag of Donuts retires with independence and then gifts his majority stock to Munchkin. Andy can be hired as an independent contractor by the company or a consultant to supplement his income. So Andy has the money, Munchkin's got the business is up and running. In essence, Andy sold his company to Munchkin. The company really funded Andy's retirement and Munchkin's purchase. Actually, Munchkin didn't purchase, but in essence, he did. He used company funds. The contribution to the pension was tax deductible. So, in essence, Munchkin got the company using company money, and Andy Bag of Donuts got the money for his retirement through the company, all on a tax deductible basis. So the next step is, if you didn't get this report in hard copy and you would like it, you can email me at necgginc@icloud.com. Call me at 203-530-6615. Or even if you'd like to discuss this case, I am open to any advisor to help them with these particular cases. And I have a backlog of cases that if you would like any of them, please email me or text me or call. Thank you very, very much. I appreciate you taking some time. Don't forget to visit my website and our blog, Your Business Worth. There's some great articles on that. Again, thanks for tuning in. I hope you enjoyed the broadcast and you learned some information that might be of value to you. Have a great week.